So there are two sides of it. There's Viktoria Ventures that does the training, a bit of the ecosystem interaction or engagement, which is what I'm doing right now. And then there's a business angel network aspect of it. So basically, like I mentioned before, what the business angel network does is just identify early stage opportunities and then just look at them from an investment perspective and see, okay, fine, if they fit our criteria, then potentially we should be able to give them money. We have been around for the last 1.5 years. Ticket size is between $50,000 to $300,000 or $500,000. But also we can stretch that a bit depending on how good the business is or opportunity presents itself. Buy More is an ERP in the micro retail space. And then the other one is called Livestock Trade Services. Angel. Commercial, not impact. Yeah. We do convertible notes for now. But I mean, anyone who says they're doing convertible note, it's because they want an equity stake. So typically you find that we look at, we max it out at 20%. So I've told you a bit about Victoria. So what is fundraising? So these are the typical questions that you'll ask yourself the moment you start doing fundraising. We look at them sequentially, and then you can just cover a bit. Maybe from the three of you can tell us how you answer them and how you somehow figured out how to present those or to answer them from an investor perspective as well. So do I have a product or proven customer demand? What does having a minimum viable product mean? I mean, maybe someone can volunteer. How many times did you need to iterate the solution or the product that you have right now before you started to focus fully on what is exactly that you're looking at right now? How many iterations did you go through? Or you just dived into it, you knew exactly what it is that you wanted, you had a clear market focus, and then you said,
First of all,
what did you try out for?
The first thing I started with?
Yes.
I first started with bags.
Birds?
Yes.
Like birds?
What do you mean? Bags. Handbags. Yes. I started with ladies' bags.
Yeah.
Then I realized that there was more demand for men bags. When the ladies were coming, they were no longer buying their bags.
I didn't know. Man bags?
Yes.
Wonder.
I started with handbags for ladies.
Okay.
Yeah.
Okay.
Then after
you realized
I realized that the ladies were coming
to buy bags.
Yeah, and for their husbands.
Now that is what you call product iteration. So you realize, okay, fine, maybe let me package it around at an offering as well, as opposed to just saying, let me just do ladies' bags. Let me just package it around, also an offering from a couple perspective, and say, okay, fine, maybe it will have more traction in that way. If I bring up the whole aspect of making men bags available, maybe I can drive more traction to my shop. Maybe I can drive more sales. Do you need to raise money? Or why do you need to raise money? I mean, have you identified a clear? Do I need to raise money? Basically what I'm trying to ask is what informs your decision to do a capital raise? What informs that decision, if you don't mind sharing?
For me, what really drives that is the impact you want to create for us to meet a specific goal that you want to achieve.
Okay.
So by realizing that impacting a small area is not enough, and we need to replicate this model in other geographical areas, then we need capital.
You need to raise money because your cash flows at that moment cannot support an expansion. Okay, good. Yeah. Why do you need to raise money?
It's just to scale the project. Right now, operating just in Nairobi.
Okay.
And there's a need for our services. We get calls from all over the country. So there's need to go out there.
But you see, what an investor will ask you, how big is that need to justify a capital raise?
How big is the need?
Yeah.
It's because for us, it's because we do the awareness part, which again raises demand for our services. So the need, we can't quantify the need as of now, but we know there is a huge need. Right?
it's hard to quantify the need.
You have to.
Yeah.
Numbers.
Numbers, yeah, I know numbers really do. Yeah, but then you have the statistics from research. But then, like, you have to go down into the because you've already piloted in Nairobi, you've seen there is demand for it. So that means if you go to Nakuru and you get calls from Nakuru already, by now we have like records of calls coming from all over the country. Then if you create a demand there, then the market is ready for such service.
Okay, you create a supply, then
Supply,
the
yeah.
uptake.
Yeah.
Okay. Yeah, but I mean, it's just to come back to that, because to some extent you have to be able to quantify the demand side. Because if you're looking at it and saying, okay, fine, I'm raising, if you don't quantify it, then how much money, do you know if you want to raise $50K? Do you want to know if you want to raise $100K? How much do you need to raise? Because then at a certain level, this amount of capital will push your customer base to this amount, to this number. So those kind of metrics are also very important. That's a lifestyle business. It just supports your lifestyle. You don't want it to grow beyond what you want it to be. So it's, for instance, why am I creating what it is that I'm creating? Why am I doing exactly it is what I'm doing? Is it just for me to be able to pay a mortgage, to buy a car, and then probably to afford Sankara from time to time, and then I call it a day and say I'm good with that? Or is it because I want to see how that can outgrow what it is, the vision that I have? So you have to decide for yourself. Because then, if you're creating a lifestyle business, something just supports your normal day-to-day activities, a bit of entertainment here, a bit of luxury there, then no investor would be looking at that, because I don't want to drive a business that the entrepreneur is not himself interested in driving. So once you figure that out, then you can say, okay, fine, yeah, maybe it's not a lifestyle business, maybe it's a commercial undertaking. So it depends on what your company wants to be. What are some of the pros and cons? I mean, something else that you need to think about before you raise money is, do I want other people into my company as well? There is always grant opportunities. You can look for grant funding, or you can look for debt, or you can just ask your friends to support your initiative or your family before you now bring other capital that has its own strings attached to it. So it's one of those things that you need to answer for yourself and say, okay, fine, is it something that I really want for myself? The reason you want a capital injection is so that at least you can see an upward trajectory of your cash flows coming in. At least you're not cash flow negative. The moment you start raising money, just think about a financial model. It will inform how much you need to raise. So will I be able to raise? The best way for you to raise money is to be where money is. How do you position yourself? I'm sure there's so many networking activities that are organized by Kijiji, or investor conferences or whatever it is that you guys are invited for. So you have to position yourself. You have to network. Importantly, you have to network with the people that have money or that are able to give you money. Be it a bank, bankers, be it private investors, be it your friends, be it your family. You must learn how to be around where money is for you to raise money as well. So it depends as well. What is your business? Are the investors that you're positioning yourself around, are they interested in funding those kind of businesses? Maybe you could be in events whereby people are looking at at a minimum ticket size of $1 million. Maybe that's not the place you need to be. So what documentation do I need to raise? What documents do you have? What have you been asked for?
Since mine was a grant, they only asked for type of registration.
That's it. Wow. That's easy.
Yes. But
sorry?
But it's still work in progress, because what was the registration documents and of course a proposal or a project plan showing what I'm going to do with the money.
With the money?
Yes. So it's still in talks. But yeah, that's all they require.
Okay, good. Are you?
I think everything you've listed.
Everything I've listed, yeah. And
because you really need to show your work.
Yeah.
In a lot of documents.
Exactly.
When it comes to the financial honesty about your business.
Yeah.
So audited accounts, financial statements, financial models, all of that.
And it is a lot of work, by the way. It's not exciting. To tell you the truth, it's not exciting. But I mean, you just have to have the documentation. You have audited statements, obviously. If you have not been around for over 12 months, you don't need audited statements. Okay, but at least as CR12, you must be registered. a contract, especially off-take contracts, if you have a supplier contract, or if you, maybe for instance, who's doing exports? You're doing exports. You have supplier contracts, off-takers.
Yeah.
And then what is the duration of those contracts? You see, that is something that investors will be keen to see, because if you only have a 2-month off-take contract, then what about the rest of the 10 months for the year, or the rest of in 2 years, 3, 4, 5 years? Or do you have a good pipeline of people that can become your off-takers? So those kind of contracts are very important, especially for people that, like I say, who need to have off-takers. Memorandum, these are not necessary anymore. I think they've been replaced in the new income tax. But incorporation documents are there, due diligence checklist, and then a financial model, and then a pitch deck. Attraction numbers, what have you achieved? I mean, between incorporation up to MVP level, and now maybe after that, maybe the first 2 months, what is your traction looking like? What is your month-on-month run? Is it double? Is it triple? Is it constant? How does that look like? So we need to see that as well. And importantly, the team. Who's backing this opportunity up? Who's really pushing this vision? Do you have capacity? First of all, capacity and capability to execute. You need to show that as well. And especially around your team as well. Not just the founder, the CEO, but from the technical people, from the product development people, all these people, they need to have capacity to execute. The business development people as well, they need to have capacity to execute. So startups, most of you are here. This is where you get your money from. I mean, here, maybe here. A bit here, maybe him. A bit here. But yeah, pretty much this is your level. I don't want to diminish you, but maybe you could be here. But you feel free to define where you want to be, but yeah. Let me not limit your options. Sorry? I don't want to limit you. You'd be interested. So these guys, this is IPO public. We have the GEMS market. Is anyone familiar with the GEMS market? Something alternatives. It's growth enterprise market segment. It was introduced by the NSE just for companies that cannot IPO. So they go there first, and then they generate a bit of public money, and then they can IPO properly. Anyway, it's not so famous anyway, so it's okay. So we have family, friends who give you money, or fools. I don't know who said that, but it's true. People give you money, people who believe in you. People who just come and say, but I mean, typically you find that this is your uncle, wealthy uncle, or your wealthy father, or neighbor, whoever it is, or your brother who's giving you money, or your mom, if she believes hard in you. And then angels and grant funding, you're also there. But angels is where we typically are there. This is where we are. This is the survival. We are hoping you'll survive and give us back our money. So this is where we are. And then we see if we can just push you a bit up to rapid growth. So this is where we fall in as Victoria. Yeah. Seed stage, early stage. There are some, especially impact. Impact investors, they come really down. You can find some impact investors giving you $50,000. Yeah, so even those ones, even these ones, they also come a bit low and say, okay, fine, Wayne, this is interesting because their interest is more impact oriented. Impact investor is someone who says, I'll give you money, but show me how many farmers you have impact that are generating income because of your solution. They specifically fund for the social aspect of it. They don't care about the numbers. They do care a bit about sustainability, but they don't pretty much care about the profit line. They are more interested in things like social impact. You know, goody things.
And are there investors who will say, okay, I'm going to invest. I'm not really interested in getting back the money, especially if you're a non-profit.
Yeah, like Mother Teresa kind of investors. Yeah, they will always be there. Yeah. But commercial guys are purely commercial. Show me the numbers. Yeah. Show me the profit margins. Show me all these other kind of things. They're purely commercial. But impact, how many are social ventures here? Okay, so social ventures. Like I mentioned before, chemistry. And this is, never take money from someone you don't gel with. If you guys don't get along together, never take money from them. It's highly recommended. Yeah, if there's no chemistry, there's no point of taking money from them. You might need it, but just don't take money from them. I mean, look for another way of doing it. Go beg from that auntie that you annoyed, or whatever it is, but don't take money from people who you don't interact with properly. So what things do I need to check out around investors? So this is just investor, you also, I mean, it's, do your due diligence. Before you raise money, do your due diligence on the investors that you want to ask for money. Who have they funded before? I mean, what amount of money have they given? How have those relationships been like? Also ask around and you'll see. You'll see people talk around. You'll see, for instance, some entrepreneurs will tell you, don't go talk to those people. Victoria, don't go talk to them. They'll frustrate you. They'll invest in you, they'll kick you out, bring in a new CEO, whatever it is. So just do your due diligence on the investors that you are approaching from an investment interest, and then see who else they are funded, see what sectors they fund, because if you go talk to someone who's focusing on maternal health, they may not fund your mental health campaign. They won't, because that's not their mandate. So you have to also look around at the investors that you're asking. If they're looking at livestock, maybe we want to come to crops. Crops are not maybe interesting to us. Not that they're not, but yeah, so also do a bit of your due diligence and find out which investor it is that you're approaching. It's always good to have an advisor, at least at this early stage, because they'll help you have interactions with an investor. You will not be squeezed too much. Yeah, so it's always good to have one. If they're free, even better.
Yes.
Okay? You're not free. But anyway, yeah, so it's always good to have a bit of an advisor who can help you, just navigate that fundraising process. Like I said, again, please don't settle for a bad investment because you need the money. It's very important. Don't just go for an investor because you need the money. You have to be careful about the kind of people that you're looking for money from. So where can I get investors? VC4A. You know about VC4A? Is anyone here? Most of you are registered with VC4A, no? Yeah. VC4A. There's Allied Crowds. There's IAFCA. Forget about this. These are more venture capital, private equity kind of people. Speak to funded entrepreneurs. Yeah, so what is the process of fundraising? Typically, this is how it looks like. It might, there's always, on the farm side, you decide, okay, fine, you've done a bit of financial model, and then you realize there's a funding gap. So you want to get some money from some capital injection into your company. So once you decide that, you start with the advisors, you come up with a document room, like a deal room that contains your financial statements, contains your company legal documents, that contains a bit of your pitch deck, contains a bit of all this other information that you need, that you'll require just to start having an engagement with an investor. And then you see, okay, fine, so these are the investors that you're interested in. 1, 2, 3, 4, 5, 6, etc., because there's alignment from a commercial or social angle. They fund the same industry. It's the same ticket size, and then they're looking to give out some money. You have done a bit of your due diligence. So then you start meeting them. You meet them, first meeting, tell us about yourself, tell us about your team, tell us about what you do, blah, blah, blah. Then, so typically, this process takes around 6 to 8 months. You're already on your 4th month, so maybe you're halfway. So I don't know grant funding, I don't know how years takes. You look for grants, you apply, you wait for an answer. But typically fundraising takes time. So it's very important for you to have money to carry you through the fundraising process before money checks in. If you don't have money, if you run out of money in between, because the investors take time before they make their decisions, they do a bit of due diligence. They also have to do their own due diligence. I mean, it's not so rare that you find entrepreneurs selling pie in the sky kind of ideas. So you have to do a bit of due diligence, make sure that the opportunity is concrete, there's a clear commercial viability, etc., etc. The team can execute, and then you can always get back your money. So that process takes a lot of time. It takes 6 months, back and forth, back and forth, back and forth. So you make sure you have money that can take you through the whole process. That you start on month 1, you don't run out of money on month 6, on month 3. And then every time you want to meet an investor, you're busy trying to chase debts. You know, this person has not paid, this person has not paid, this person has not paid. You're collecting debt then. No, make sure you have money that can sustain your period of fundraising.